at me through there, and I will go ahead and answer them while I'm training here. So I didn't receive a response, so I'm guessing everybody can see this. These are the session times. So when the market opens up, it opens up during Asian session. Okay, so it opens up at 2:00 p.m. This is all Pacific time. Okay, so currently right now it's 1:39 p.m. Pacific time. So you guys can go ahead and convert it into your times. So 2 p.m. market opens up. So today it opened up at 2:00, and from 2 to 5:30, that's considered a dead gap. So what a dead gap is, there's no market maker controlling the charts. There's no market maker on the computer during this period of time. Now we have the Asian session here. For dead gap, by the way, you guys should not trade that period of time because there's barely any movement going on. If there's news at that time, that might be what causes that short amount of movement. But other than that, there's no person at the computer moving the chart. So what else would be moving the charts trying to take your money? So after that, we have Asian session. Asian session is from 5:30 p.m. Pacific time to 12 a.m. midnight. Okay, Eastern time, that's 8:30, and it ends at 3:00 a.m. Okay, so that's Asian time. All right, that's Asian time there. And then there's a gap between Asian and London. There's a 30-minute gap. Most people they believe London starts at 12. No, it starts at 12:30 a.m. Pacific time. Give me 1 second. Starts at 12:30, ends at 6:00. Okay, so there's gaps between these sessions, 30-minute gaps between each one of them. And then after that, you have New York session, 6:30 to 2 p.m. Pacific time. Okay, I'm pretty sure I gave you guys enough time to write that down. So I'm just basically going over the schedule and stuff because there are some people that don't have it. So the market resets every single day, and that's at 2:00 p.m. every single day after New York session ends. Okay, and when it resets, if you still have a trade open after it resets, the same trade you had before, you will be charged commission fee. Okay, because it's a swap. It's a swap day. You carry the trade over to the next day. Depending on your broker, you will have a commission fee. All right, so I'm gonna go ahead and start with this training here. So right here we have Euro USD. Now, based off of the training that I'm gonna give you guys, I'm gonna let you guys know this, okay? Today, the market opened up again. It's Sunday, the market opened up. You do not want to trade on Sundays, period. Why? Because Sundays are trap days. Sundays, Fridays are trap days. And why are they trap days? They're trap days because on Sundays, the market makers are getting prepared for the week. They went through the whole week and okay, they didn't have any Forex traders going on. So they're getting prepared for the week to make they're making their trap moves. So let's start with today. Okay, so see the market opened up right here, all right, around this area. Okay, so you see that last week they went down. They were going down, all right, and at the end of the week, what did they do? Okay, right here. Let me see if I can get a 1 second. Jesus, how do you work this thing? All right, so right here, about this area, the market closed last week. Okay, the market closed off of this period here. All right, so this rectangle highlighted here, that's where the market closed last week. How did they close exactly? So the whole week they were going down, you know, doing their moves and stuff, and they started going down, bam, bam. Now they freaking pulled away so fast, it created a panic, so it caused people to sell. Okay, it caused people to sell. So as a normal retail trader, people will start selling here. Okay, putting positions. Oh, now I'm gonna stop at the end of the week and I'm gonna go up a little bit. Okay, so the market maker goes up and the short holders are still holding their trades, and those that went short had stop losses, right? So went up, hit the stop losses, decided to pull back again, okay, get more contracts. So now they open the week off. Give me one second. Okay, they open the week off. And what do? They consolidate for a little bit. So Sunday, remember, is a trap day. You need to get that stuck in your head, because these are the days that you have to be careful trading. All right, so Sunday, what do? And they consolidate for a little while, and then look, they drop, right? They drop. Oh, it's going to continue down. So the retail traders are going to think it's going to continue down. No, it's not going to continue down. It's a trap day. They're going to trap you short. And then what are they going to do? Oh, they're going to go long. Wow, as easy as that. They're trapping the traders going short, and they pull away quickly going long. As easy and simple as that. It's all about psychology. You have to think like the market maker. And if you guys notice, what is this formation right here? What letter does that look like? That looks like a W, right? I'm making sure everybody's still alive. Okay. W formation here. Bam, bam. So we got the first leg here. We have the second leg right here. Let me delete this real quick. Okay. First leg here. Went up. Second leg went up. Okay. That's one of the key formations for a reversal pattern. Intraday reversal, weekly reversals. So you can find intraday reversals. There's reversals in the same day where it goes down for a period and then it reverses back up with a W formation, M formation. We'll talk about that more. But this is one of the reasons why you should not trade Sundays, because it's a trap day. They're trapping you short, going long, trapping you long, going short. W formation, you take the trade off the second leg. Okay, once you confirm the second leg, bam, you take the trade, you go long. I'm currently in this trade. Let me tell you guys how much I'm in profit and what price I got into, just so you guys can know what you guys will be capable of once you guys are through with this training. So I got in at 10.8247. Let's see, where's that? 10.8247. That is around this area right here. I got in there. All right, so that means like around this, one of these two candles somewhere. I got in here and I'm in pretty decent profit with high lot sizes. Okay, W formation, I caught that. That's what you guys are going to be able to learn. All right, so remember that Sundays, trap days. Mondays are considered trap days as well, but you can see reversal patterns through them as well. And now Fridays, okay. Fridays, I explained to you guys a bit. This is Friday. It closed on here. They faked people out. They went long, hit the stop hunts, and they made people carry over their trades for the weekend. Why? Because people still thought it was going to go short. Look what they did here. They went short just a little bit right here just to convince people to carry their trades over the weekend. That's all it takes. Like, there's no more trading like retail traders. No, you guys are going to trade like market makers now. All right, so enough of that. So another thing, don't keep your trades over for the weekend. Don't ever do that. The reason why is because I'm not sure if you guys see it or not. You can see it on the 15. Let me pull it on the 5. No, you can't see it on the 5 either. Okay. One hopefully shows it. Maybe not. Okay, so what I'm talking about is, okay, if you carry your trade over for the weekend, I'm sure many of you guys have seen charts before where it opens up in gaps. Okay, so let's say you carry this trade over Euro USD. You still think it's going short because they confused you. You still thought it was going short, but no, it didn't go short. It ended up reversing back up. But right here in between, there's a gap. Okay, that gap happens because the market's still moving during the weekend. We just can't trade it. There's still a lot of economical situations and news and all that stuff going on. Okay, but we can't take a trade on it. So the market doesn't update until Sunday open. So what happens is it leaves a gap. When it leaves that gap, you don't know where it's going to leave it based off of your trade if you leave it over the weekend. It could be way above here, it could be way down here. Where's your stop loss going to be? How much money do you have in your account? How much can your account take? Okay, so what if it opened all the way up here and you had a sell and you had your trade all the way down here? You started trading down here, okay, and it opens up here. Your account will probably be blown due to either risk management or whatnot and carried it over the weekend as well. Okay, so that's one thing. That's one reason why you don't carry trades over the weekend at all, period. And you guys have the times of the session, so you guys know when to close out the trades. All right, so we have the W formation here. I explained Sunday's trap day and Friday's trap day. They went short, W formation, beginning of Sunday, trap traders to go short, went long. Okay, now on the higher time frames, let's do the 4-hour. Euro USD has been choppy, but if you learn to trade the way I do, then choppiness is beautiful as well. Okay, so long term, we can see here. We can see here. Okay, so what did it do? It went short, and look at that. It started to reverse up, right? That's the trap day. You can see that here. Bam, go short, long wicks, convincing traders to go short, reverse back up. Okay, so I expect this to go pretty high up there. I'm leaving the trade in for the next couple days probably, but this is what you're expecting for Sundays and Fridays, okay? They go short, and you can see this on every time frame. You can see W formations. Here's the W formation right here. Second leg shoots up. Okay, so we can either expect a W formation to form here, goes down, W formation, or it can just take off from here. To validate that, or to confirm that, you go to lower time frames, and look, I see the W formation. So the higher time frames doesn't necessarily have to show a W formation, okay? But the lower time frames, they have to show it in order to confirm the trade. Now, these are high probability trades, so your risk of losing a trade is so minimal because these are high probability trades. These are 92% trades, 98% trades if you add more confirmations to it. So the point is to lessen the amount of losing trades. That way you have more gains and more profits. So we have Sunday, Mondays, and Fridays considered trap days. The beginning of the day is also considered trap days. Okay? The beginning of each day is considered trap days. So beginning of Sunday obviously is going to be a trap day the whole day. And the beginning of Monday, trap day. Okay? This is for all pairs. Now give me 1 second. Let me check my messenger for any questions. All right, none so far. That's good. If you guys have any questions, go ahead and message me. Don't be shy. All right, so we have that. 1 second. Okay. So beginning of Sunday, trap day. Beginning of Monday, trap day. Beginning of every single day, trap day. All right. Beginning of each session. Now I showed you guys the sessions. You guys should have this on your notes. So each session, we have 3 sessions: Asian, London, and New York. There's more sessions, Sydney, other sessions and stuff like that. I don't pay attention to because these are the main ones. These are where the most pips are made, most action is taken. Okay, so beginning of each session as well, trapped. So London session starts in about 45 minutes or so, or no, in 35 minutes. So what do you expect to see? You expect to see false moves. You expect to see trap days. Trap beginning session. Okay, so you don't expect the market to go where you want it to go, or where you're predicting it's going to go. Okay, so that's what you expect to see. Now, the first half an hour of each session, expect to go the opposite way of the planned direction you had in the first place. Okay, so expect that as well. Now, during the Asian session, most of the time for each pair, what you're going to see is consolidation. Now, what is consolidation? Consolidation is when the market moves sideways. Now, you see here, let me see. Now, right here, you see the market just going, you see the market just going sideways here, right? It's going up and down, basically staying in the same range. Okay, hold on, give me one. Yeah, staying in the same range. It isn't really passing any other high or anything, passing any other low. No, it's not doing that. That's considered consolidation. It's when the market is just moving sideways, not really in a true direction. All right, so that's consolidation. Now, consolidation in market maker definition, what that is consolidation equals collecting contracts. And what do I mean by collecting contracts? Collecting contracts meaning they want traders to place trades because they either think it's still going to be going long or still going to be going short. They're just collecting trades right here. Okay, so they're making traders basically not want to wait for its true direction. So us as traders, we don't have patience. We want the market to move now because we placed a trade already, or we want it to move here already because we want to place a trade. So this is what they're doing. They're making us place trades and it's not even going any direction yet. Okay, so this is the reason for that. Now we can see it in many other places. We can see, this is not consolidation, but here's a nice W formation. Second leg doesn't break the first leg. That's another thing to look for, but I'm gonna go over that next Sunday. Next Sunday we're gonna get crazy in here because we'll actually have a whole hour to do it now that I know how to do this. So look at this. All right, consolidation here. Damn. And what did they do? Up, fake people out. Bam, went down. Okay, and this is most likely going to be intraday. So what they do, they collected contracts. So W formation here, started moving up, stop hunted people. Whoever placed stop hunts, they probably got their contracts right here. For everybody that went long, or place a trade over here. Stop hunt, bam, stop hunt, up, stop hunt, up. Consolidation. Okay, now when you see consolidation like this, what do you expect for them to do? What you expect for them to do is, you know how it's been going up for so long. Then randomly they started consolidating. Oh, is a big move about to come? I'm going to fake, I'm the market maker. I'm going to fake people out after collecting contracts. And I'm going to go up, making people believe that I'm still going up. After that, I'm going to fake people out and just drop and take everybody's money. That's exactly what they did. Okay, so once again, I'm going to repeat it. Give me 1 second. I have people messaging me. Will you be making any live trades? Not today. I have live trades on right now. I have live trades on right now, but I will trade live next Sunday. Okay. So the question was, will you be making any live trades? Not today. I already have, well, I had 4 live trades going on already. And I closed 2 of them out. The higher lot sizes that I had. I have 2 more going. So I'm going to keep that going. They're currently on Euro USD. I showed you guys where it is I bought from. So those are, I have 2 trades going there. All right. So next Sunday, I will trade live with you guys. All right. I don't see what's wrong with that. There's no reason for me not to. I can show you guys the real deal while the markets are actually going. All right. So I was explaining once again, W formation. Okay. Moving the market up, hitting stop hunts right here. They're considered stop hunts. When you hit the stop loss, bam, stop hunts. Then keeps going its true direction. It never breaks this W. Okay? It forms a W. It never goes below it. It makes stop hunts, but it never goes below it. That's considered a peak low formation. What do I mean by that? Peak low formation. The opposite of that, peak high formation, but this forms a peak low formation. This is the lowest point, okay? And when you confirm that by the peak low formation not being broken, okay? So it went up, oh, it might go down, but no, it wasn't broken. Going up again, it's going down. Oh, is it going to break the peak low? No, not broken. It's making higher lows and higher highs. And I'm going to explain that more next week. So going long, consolidate, fake move, reverse, back down. Okay. So those are the big moves that you guys have to look for. W formations, M formations, which I'm going to go over next week. We don't have much time here before London opens. So I'm going to go ahead and just make it as brief as possible. So does anybody have any questions that you guys would like me to answer right now? If you guys have any questions, go ahead and message me on Facebook. Let me check to see if anybody asked questions on the post that I made. Go ahead and message me on Facebook right now if you guys have any questions. And does everybody have the times of the sessions down? Did everybody get that down? Or is there anybody that didn't get that down? Go ahead and message me on Facebook. I'm going to find a better way of communicating. I feel like Facebook isn't the best way. Okay. Yeah, so I'm going to find a better way of communicating with you guys. That way it's much easier. Okay, so that's basically it for today. Let me maybe just drop some potential trades for you guys tonight. Let me see what's on. So Euro USD, I'm already in on that. Let's see. Nah. All right, I'm not going to be showing it on here. I'm actually looking at it through my phone. I'm looking at it through my phone just so I can look up a pair real quick just to see any potential trades for tonight. Euro USD, my prediction is going to go up, but I'm waiting for confirmations. Right now, it's kind of going up a lot, actually, and it formed another W formation, a smaller one, but I will wait for confirmation. I currently still have those trades open. So Euro USD, if it goes down to the previous low, I would say take a buy on it pretty close to that. But I want you guys to message me before you guys do, okay? Because I don't want to blow your accounts or anything by using bad risk management. So Euro USD is actually going up a lot right now. Never mind. Don't take any trades on Euro USD because You guys might have missed positions already. Okay, I'm sorry about that. Never mind. Cancel Euro USD because it already went up too much. I don't want you guys to take any heat. So, what was I? Okay, so next week, I promise you guys, I will go ahead and go live with you. London session is going to open in 27 minutes. So I'm not sure if you guys trade with a group or anything, but go ahead and do your thing. Now you guys know the session times and everything, and you guys learned a little bit about W formations and how it is that the market maker thinks. Remember, the market maker wants to take your money, okay? Think of it that way. You have to think about how they're going to take your money, the moves they're going to make to take your money, okay? So we'll go over everything else next week, and we'll get into more detail. We'll have a full hour to do so, so you guys are going to be able to learn a lot more, okay? So I will catch you guys next week, and I'm also going to be trading live with you guys next week. That way we can all make some money if we see any potential trades, all right? So I will catch you guys next week, and message me if you guys have any concerns or anything about that. And I will catch you guys later, all right?